If four things are followed, having a great aim, acquiring knowledge, hard work, and perseverance, then anything can be achieved. A.B.L. Abdul Kalam. That's a former president of India. I just looked that up. I did not know who that fellow was, but what great advice. Having a great aim, acquiring knowledge, hard work, and perseverance. All of those we talk about here every day. We ask 10 to 15 minutes a day, following the markets, learning the nuances of price movement, following the big trends. What do we see going on in the markets today? We see the S&P 500 and the NASDAQ 100, QQQ. We see those moving up after weekly vertical crossovers at the end of last week. What do we see with 20-year bonds continuing a move down 1.44%, and gold continuing to move down too? We'll talk about those. We'll talk about everything. Oh, and lastly, we'll talk about Bitcoin up 3.81%. But again, look how weak it's looking. We'll talk more about that when we get there. Let's start with the S&P swinging back 2.42% after a strong weekly vertical crossover going down. Price percent oscillator flat, still negative, of course. Derivative oscillator gaining downward momentum. We have a green spinning top at this point, lots of indecision. 2-day chart going from down to flat, still heading down just a little bit. Derivative oscillator still gaining downward momentum. How did we end up? Well, we ended up, if we move out of the way, you can see, ended up with a big green spinning top right there for Friday and Monday on that 2-day chart. And of course, we can see price right there at the 2-day trend line, just barely moving there on it below the weekly. And again, swing back on Monday. We'll see how the rest of the week goes. Again, it's a solid green spinning top, so that is a slowdown in the down movement. It is not a green up candle, so we'll keep an eye on things. What about the half day? We can see where things bottomed on Friday morning, pulled back a little on Friday afternoon, and then shot up Monday morning and Monday afternoon, pushing through the half-day trend line, the 2-day trend line. And again, we'll continue to keep an eye on things as they move along. And we'll see just what's happening, if this is just a burst up on Monday, or if these markets are going to try to surge up again. We'll continue to watch, pay close attention as to how this week progresses. Let's look at the Qs, up a little bit more, 3% swinging back after that strong weekly vertical crossover going down. Price percent oscillator still heading down, green spinning top. So we see, it's a green spinning top. I'm trying to focus in and see just how, well, there's not much of a wick, if any, on top. I'm having a hard time on my screen. No, it looks like there's just a wick on the bottom. So again, it is a solid green candle, slow down in the down movement. Price percent oscillator still moving down. Derivative oscillator gaining downward momentum. Prices below the weekly, that's not much of a weekly trend line, has pushed through both the 2-day and the half-day. Now, when we look at the 2-day chart, we can see we're sitting right there on the line. This is a different time frame. See, that's what it looks like on the weekly. We go to the intermediate chart, the 2-day, and we can see where price is sitting right there on that 2-day trend line. Price percent oscillator still going down, derivative oscillator. So there's more downward pressure on the Qs than there is on the S&P. But again, downward pressure is still there on both of them, with the 2-day and the weekly going down on both. The derivative oscillator gaining downward momentum. Of course, that's just the momentum swing from those 6 days of down movement. Now we look at the half day, up in the morning, further up in the afternoon. Of course, it started off pushing through the half day and, of course, pushing through the 2-day at the end of the day. And at the end of the day, look at that. Price percent oscillator, derivative oscillator together, laminated, hasn't crossed over. So we'll see what Tuesday shows us. Is this an anomaly? Are things going to just peter out and move back down? We'll see, and let the charts lead us. Now that is where we are on our stocks. We're going to move from stocks to bonds. Of course, that bonds just continue on moving down. Now we haven't hit the lows this week on Monday that we hit last week, but down for the day 1.44%. Again, well below the weekly trend line. That keeps moving down. Derivative oscillator, price percent oscillator. Go to the half day. That is where we can see things flattening after that, let's say half day, go to the 2-day from the weekly. We can see on this 2-day chart, strong down movement on Wednesday and Thursday, and then the Friday and Monday, we have a green, almost a doji. Prices below that 2-day trend line. Derivative oscillator losing momentum. Price percent oscillator losing some of its downward push, but still heading down, and of course still negative. And like we said, down for the day quite nicely at 1.44%. Continue to watch, particularly with that green doji there, lots of indecision. We can see where things had popped up on Friday morning and afternoon, and then sliding sideways and down on Monday. So that half-day chart still positive and heading up, but the overall mood on the 2-day and the weekly particular is still lots of downward pressure. So that's where we are as far as bonds go. Let's look at gold. Gold down 0.17%, 0.17%. But again, nice, we see gold continuing to track down on the weekly chart. Derivative oscillator gaining downward momentum. Price percent oscillator heading down. Let's see, have we hit the low of last week? Last week, the low was 160.95. So far this week, 161.16. So not quite, but again, candles moving down, derivative oscillator heading down, price percent oscillator going down. 2-day chart, nice big long down candle. We can see where that move apparently was on Friday, not Monday, but again represents spiking over of the price percent oscillator, derivative oscillator that had been flat, hammering down more. So that is good to see on the 2-day. Half day, we can see where things had peaked on the down movement Friday morning, moved a little more Friday afternoon, but not hitting that peak. And then down for the day, of course, on just a little bit on Monday. So gold continuing to head down. That 2-day recross on gold still serving us quite well. And of course, on 20-year bonds, that 2-day recross also continues in play. But again, be careful with how things are flattening on the 2-day. Continue to pay close attention to that. But again, a nice down day, 1.44%. So we'll watch and see how those charts lead us. Now, lastly, go back to the weekly. We go to Bitcoin. Bitcoin up for the day, 3.81%. But look how the week is starting off, quite weakly. It is a red candle open box, but just barely, almost a doji. Not a lot of price movement right there, showing some real weakening coming off that trend of up movement. Price percent oscillator positive, but headed down. Derivative oscillator negative and gaining momentum. Look at the 2-day. Again, red down candle with a lower low. We see the price percent oscillator slowly pulling away from the red signal line, and the derivative oscillator positive but losing momentum. We look at the half-day chart. It is still -2. So what do we want to see happen that would get us excited about Bitcoin again? First, it'll probably be led by the half-day crossing over going up, followed by a recross of the 2-day with the weekly not crossing over going down. So we'll keep an eye on Bitcoin as the week moves along. These latest moves have been, of course, good for us. We had that 2-day recross going up that served us well, that again has petered out on us with that crossover going down. So we'll continue to watch and see and let these charts lead us. Now we're going to pay close attention as to what happens with stocks as this week progresses. Again, are we finally going to see that down movement really kick in? On the Qs, it really has moved over. The rest of this week's going to help us see that. Are we going to see the S&P continue to roll over and move down after Monday? We shall see. The pressure is down. The pressure on bonds is still down, as on gold. Can everything move down together? That's a good question. Typically what happens, of course, if there is a big crash coming in stocks, people have margin calls. So at the beginning, everything goes down together. Why? Because people are selling stuff, trying to make their margin calls. They might be selling their bonds and their gold. Then things sort out. Gold and bonds start to gain energy, typically after the shorts have been run out, after the margin calls have been made. Things move down inexorably in stocks. Bonds and gold may rally. But that isn't happening yet. We're just watching, paying attention to these charts, and letting the truth lead us. We can't forecast the future, but we can darn sure follow trends, based our decisions on what has worked in the past and what we see working as we move through time. That's where we are, folks. God bless you. All the best. Thank you again for all your support. Oh, and Patreon members, don't forget, we have our live Patreon Q&A this Wednesday, 12:30 Eastern Standard Time. If you're not a Patreon subscriber, want to become one and join in these live Q&A sessions, you know what you got to do? You just have to become a Patreon supporter. God bless. All the best from the whole team at Charting Wealth World Headquarters.